Bernie Madoff's Ponzi Scheme, 2008. Bernie Madoff's Ponzi scheme ran for 4 decades and defrauded investors of $65 billion. He promised consistent annual returns of 10 to 12%, even during market downturns, targeting wealthy and influential clients with his foolproof investment strategy. Instead of actually investing their money, Madoff used funds from new clients to pay old ones, creating the illusion of great returns. This fake success attracted even more investors, allowing the scam to expand. He used the stolen money to fund his lavish lifestyle and pay for his firm's operations, manipulating account statements to show non-existent gains. When the 2008 financial crisis hit, clients rushed to withdraw their money, and the scheme collapsed. When the scam came to light, 4,800 clients were affected, and $18 billion was lost. Bernie was sentenced to 150 years in prison but passed away in 2021. Enron scandal, 2001. Enron, once a titan of the energy sector, crumbled under the weight of its own lies. The company used accounting tricks to inflate revenues and hide massive debts, fooling investors and regulators for years. Enron's executives created fake partnerships to shift liabilities off their books, making the company appear more profitable than it was. This deceptive accounting lured investors and inflated the stock price. An employee tried to blow the whistle, but management ignored it until the truth finally came out. By late 2001, Enron's stock price dropped from $90 to just $1, wiping out employees' retirement savings and investor wealth. Enron filed for bankruptcy with $63 billion in assets, the largest in U.S. history at the time. The company's CEO was sentenced to 24 years in prison. This scandal led to major corporate law changes, including the Sarbanes-Oxley Act, to prevent future fraud. Charles Ponzi's scheme, 1920. Charles Ponzi is the man behind the term Ponzi scheme. In 1920, he promised investors insane returns, 50% in 45 days or 100% in 90 days. He claimed he was flipping postal coupons between countries for profit, exploiting price differences. But the reality was far from that. Ponzi wasn't making any real profits. He was using money from new investors to pay off earlier ones. As long as more people joined, the scam continued to grow. At its peak, Ponzi made $15 million in just 8 months, using the money to host luxurious parties, buy mansions, and flaunt his wealth. Eventually, journalists and investigators exposed the fraud. Ponzi was sentenced to 5 years in prison. He spent the rest of his life in poverty and eventually died in Brazil. The FTX collapse, 2022, FTX was once the hero of the crypto world, valued at $32 billion. Its founder, Sam Bankman-Fried, was hailed as a crypto prodigy. But behind the scenes, the company was caught using customer funds to make risky bets for its sister company, Alameda Research, instead of keeping those funds secure. In 2022, when customers attempted to withdraw $6 billion, FTX couldn't arrange the money, revealing the fraud. The collapse sent shockwaves through the cryptocurrency industry. Thousands of investors, including celebrities like Tom Brady, faced massive losses. FTX filed for bankruptcy, with allegations of mismanagement and fraud at its core. Sam Bankman-Fried was sentenced to 25 years in prison. WorldCom scandal, 2002. WorldCom, a telecom giant, fabricated $11 billion in profits through fraudulent accounting practices. The company manipulated its expenses to make it seem more profitable, fooling investors and analysts alike. Their goal was simple: keep investors happy and the stock price high, regardless of the truth. The lies went on until an employee exposed their fraudulent activities. The stock price collapsed from $60 to $1, wiping out the savings of thousands of customers and employees. WorldCom filed for bankruptcy with $42 billion in liabilities, the largest at the time. CEO Bernie Ebbers received a 25-year prison sentence. The scandal remains one of the biggest corporate fraud cases in history. 1MDB scandal. The 1MDB scandal shook Malaysia and the global financial world to its core. It involved over $4.5 billion of public funds being siphoned off from the Malaysian government's investment fund, 1MDB. The money was laundered and used for personal luxury, including yachts, mansions, art, and even financing the Hollywood movie, The Wolf of Wall Street. Political bribes and lavish lifestyles were funded by stolen public money. The scandal implicated the Malaysian Prime Minister, who was later sentenced to 12 years in prison for corruption and abuse of power. The OneCoin scam, 2014 to 2017. OneCoin was marketed as the next big cryptocurrency, but turned out to be nothing more than a Ponzi scheme. It tricked millions of investors across 175 countries out of $4.4 billion. The scam promised sky-high returns and claimed to have revolutionary blockchain technology. But the truth was that OneCoin wasn't even built on a real blockchain. Instead of using legitimate technology, the founders used investors' money to fund their luxurious lifestyles and sustain the scam. The founder disappeared in 2017, and her location remains unknown. The FBI has placed a massive $5 million bounty for anyone who finds her. But what if these scams turn into financial crisis? Click here to watch all the biggest financial crisis explained in 5 minutes.